news flow out of Eskom is that the company has submitted a revised tariff application of 35% per year. Now, that is in nominal terms to NERSA under Eskom's multi-year price determination, or the MYPD, and that's for the financial years 2010-11, 2012-13. And of course, this process follows a rigorous engagement with various stakeholders to come up with a sustainable electricity tariff path to ensure the country's security of supply without adversely impacting the country's socio-economic progress. This afternoon, CNBC Africa's Chris Bishop, he's a senior journalist with us, attended a briefing by Eskom's acting chairman, Mpho Makwana, on the matter.
There is no room for anybody to say your side of the ship is leaking. If this Titanic sink, we all sink.
With this unfortunate reference to a doomed luxury liner, the last Eskom press conference of the year got underway at Megawatt Park in Johannesburg. The last action, a climb down over price increases.
Since the 30th of September 2009, also been engaging with stakeholders much more directly. As a result of this process, and as a result of the various inputs we received, we have since revised our application.
In this case, I think they consulted, with SALGA and Treasury, and after getting, additional, comments and inputs from their stakeholders, they do submit, further information to the energy regulator.
Eskom is banking on a fall in demand for electricity and has postponed for a year a coal-fired power station at Kusile and a wind farm at Sere. In the next 15 years, Eskom has a mountain to climb. It has 42,000 megawatts of installed capacity. According to the energy regulator, NERSA, an expected growth in demand of 2.6% a year means Eskom needs at least 20,000 megawatts more by 2025, at a cost of around 385 billion rand. To make matters worse, many of South Africa's power stations are expected to end their lives in 2018. To pay for this new capacity, Eskom planned a 45% increase a year for 3 years, a figure that experts say still left a 30 billion rand shortfall. Now it is caved in under pressure and wants 35%.
There has been a significant climb down, obviously coming from political pressure, from government, from trade unions, from political parties, from business, from industry, and from consumers. And this has caused Eskom to rethink their position clearly. It's important to try and find the rationale and the rational basis behind this climb down. In other words, if it is just seen as a change, an arbitrary change in their application, it would do great harm to their credibility.
It means Eskom has a shortfall of 14 billion rand in 2011-2012 and 7.9 billion rand the following year. Africa's biggest power generator is to turn to private investors to fill the gap. They want business to back existing projects and even pay for new ones. Eskom hopes 20 billion rand in private money will come forth in difficult times.
The intention is to appoint an equity advisor, and we will then go through a process to invite people to make representations. We have no doubt that it will be a challenge, but we are also confident that there is potential in the market, and that by inviting people to come with proposals, that we should be able to raise some equity that will enable us to close this funding gap for us.
They seemed reasonably confident of their ability to attract private equity funding. Whether this will be borne out in reality in these economic times remains to be seen.
Eskom says if it fails to raise the money, it'll go to government for more, and as a last resort, it'll go back to the regulator yet again.
All this will go on while Eskom hunts for a new CEO over the next 6 months. The next date to watch out for is January the 11th, when public hearings begin. NERSA, the national regulator, will make its final decision on February the 24th. Chris Bishop for CNBC Africa, Megawatt Park, Johannesburg.
Joining us now from Cape Town is Cornelis van der Walt, Frost and Sullivan. Still with me in studio, Nic Norman-Smith, Lentus Asset Management. Cornelis, let's start off with your viewpoint on the news flow out of Eskom. Certainly good news for business and consumer alike in South Africa.
Yes, indeed. I think everybody had the hand on their heart, very, very nervous about a 45% increase. And obviously a 45% increase over 3 years certainly didn't spell anything good for consumers. However, the 45% didn't fall out of the air. It was derived as a result of the large capital expenditure that Eskom is currently engaged in. And basically, it seems like Eskom has decided that they will defer some of their projects and that they will try and get some private equity into these projects and thereby decreasing the rates. And I think it's a very risky strategy to follow, but it seems like the political and social pressures has gotten the better of Eskom.
Well, as my colleague Stephen Gunyon was asking on Power Lunch earlier today, does that mean that there is a risk that we're not going to have electricity going forward?
Oh, it's a very real risk, Bronwyn. I believe that the 2010 FIFA World Cup obviously will go very smoothly. There's a lot of backup at the stadiums. Everything surrounding that, I think, is in place and should be fine. But certainly the period after that and moving into 2011 and 2012, we are moving into very, very dangerous territory. The reserve margin is already sitting at around 8%. We know that the capacity coming online has been slowed down, and specifically now Kusile being deferred for another year means that we're going to be in a very, very, very risky period between 2011 and 2013.
Would the better solution then be for us to have paid that 45% tariff increase for the next 3 years?
I believe so. Obviously, one has to also look at the impact it's going to have on the economy. Certainly, there's a lot of marginal mines, and certainly in terms of the government strategy of beneficiation, it would have had a very detrimental impact. What should have really happened was that we should have been paying more for electricity over the last number of years, not only as a shock as we're seeing at the moment. Obviously, we have 2020 vision in hindsight, which makes it much easier to predict exactly what is going to happen. But I believe that reducing the tariff in the medium to longer term is going to have a far more detrimental effect. Having said that, I must also add this is really opening the door for independent power producers to enter the South African market. We certainly require the expertise, we certainly require the finance, we certainly require the ability to add additional energy to the grid. And to break the monopoly that Eskom has had on the economy and on South Africa for far too long.
Cornelis, appreciate your insights. Thank you very much for joining us. That was Cornelis van der Walt, Frost and Sullivan joining us from our Cape Town studio. Let's come back to Imperial. They came out with a trading update today and volumes are down, especially ahead of the festive season. They're not seeing any pickup in vehicle sales. Again, a barometer of the economy, the vehicle side of things.
Absolutely, and obviously there was a massive growth over the boom period, so it is going to take a while for it to come back. But sure, we're starting to see mixed signals out the economy. So we had credit extension down, the banks aren't lending. Imperial has mentioned their car sales, but at the same time we've got some positives. Consumer sentiment up, purchasing managers index up. So the market still doesn't quite know, we still don't quite know economically where we are. But sure, there's certainly not great news coming out. And these guys are the guys at the, at the forefront, and they're dealing with consumers. And they're certainly not too excited about the near-term future.
Other news flow out today is De Beers and its rights offer. Are you taking any cognizance of that one?
The diamond industry's been under pressure for quite a while. Even some of the small independent producers that I've spoken to battling to get funding for new projects, as everyone is. So it's going to be interesting. Anglo's obviously strengthening their balance sheet and selling off a lot of assets. Now, if they're going to have a capital call to put money into De Beers, it's going to be interesting to see what their strategy is there going forward.
And you were saying that valuations on the resource front looked relatively stretched, particularly on Anglo American. We're sitting now at R326.12, up 2.25% today, so outperforming the local market.
Yeah, sure. No, I mean, Mr. Market is going a bit crazy in terms of the resources, so we'll be quite happy to sit back and wait till they're more attractive prices.
Financials, your exposure on that front, particularly looking at Old Mutual down at the bottom of the top 40 today. We're down at R13.94. Having spoken to a number of analysts on the stock, there are a couple who are looking for a target price of around about R18 on Old Mutual. Are you not one of those that are relatively bullish on the stock?
No, we're not. We don't hold Old Mutual. The two financials that we hold for our clients are African Bank and then the more established Standard Bank. We're not a big fan of Old Mutual. Sure, but back at the bottom it was a steal, but then so were a lot of the other stocks. So no, not something that we hold.